Good morning, everyone, and trust we all doing great. So I welcome each and every one of you to this wonderful session, London session analysis. I welcome you guys. So let's take a look at the dollar index and Euro USD, probably Nasdaq and US 30 with S&P 500 to see what we are going to get from them. We noticed a slow start yesterday, being Monday, because there was no high impact news yesterday, being Monday. There was no news yesterday, and today we have ISM service PMI coming up around 4 p.m. News USD. So let's quickly take a look at the dollar index. During our weekly session analysis, I think I have to remove all of this thing to start over. I have to remove all of this thing to start all over again. Okay. So from our weekly from our weekly analysis, yeah, price reacting of this monthly gap here. All the candles here represent what happened in the last 1 month. So the month of February closed below our fair value gap, our monthly fair value gap. After reaching the consequent encroachment, which is the 50% of this candle, we need to measure that to be sure. We need to be sure we're actually close above the 50%. Okay. And our price actually got to the 50% of this candle, which is consequent encroachment, and closing below it before eventually closing entirely below the monthly gap, right? So this is our number one confirmation that we're expecting price to drop. We have this external range liquidity here, which is our sell stop liquidity. We have this our sell stop liquidity, and we have this too. So from what we are seeing on the monthly time frame, we can say that that dollar is bearish from the monthly time frame. We can say that dollar is bearish from the monthly time frame. So let's quickly take a look at the weekly time frame and see what we're going to get from the weekly time frame. Now, looking at the weekly time frame, I don't need this. I have to delete this. I have to delete this as well. So looking at the weekly time frame, we have this internal range liquidity here, which is also our weekly fair value gap, which is also our weekly fair value gap. So for let's say for like 4 weeks now, 1, 2, 3, 4, 5. Okay, for 4 weeks now, price have not really given us any significant move. But the most important thing there is in the last 2 weeks, price closed below this weekly fair value gap. Price closed below this weekly fair value gap. So that is our number 2 confirmation that we're expecting the dollar index, or we're expecting dollar to drop. That we're expecting dollar to drop, right? So we have this external range liquidity here, which is also sell stop liquidity that we are looking at for price to come take out when when the drop starts. And we have this monthly DOL here as well. So going down to the daily time frame, let's see what we're going to get from the daily time frame. The daily time frame is giving us quite some nice information, right? I don't need this. I have to delete. I don't need. So the daily time frame, yeah, I have this monthly gap here. Sorry, this daily gap here. I have this daily gap, right? And price already played this daily gap. That is another extra confirmation. Now, looking closely again, I have this buy stop liquidity here being taken out. I have this buy stop liquidity here being taken out. I think I have to level this. Change it to black. I love black so much. So what else am I seeing here? I have a tortoise, or you can call it a stop hunt. I have a tortoise, or you can call it a stop hunt. And from the daily, I have got a breaker. I've got a breaker. So now pay attention to this, please. From this breaker here, from this breaker here, price broke out from this place and retested this breaker. So what I'm expecting here is for price to give us another confirmation telling us that yes, the down movement is about to start. But we cannot see that confirmation here on the daily time frame. That is why we need to go down to the 4-hour time frame and the 1-hour time frame to see the information the 4-hour or the 1-hour time frame is giving us, right? So let's go down to 4-hour time frame. Now here in 4-hour time frame, we have our breaker here. We have our breaker block, right? And looking closely again, I have this high, this lower high, and this lower low here. So I've got an SMT. Okay, so for me to have an SMT on dollar index, that means Euro USD should give me an SMT as well, but that is not enough. But that is not enough, right? That is not enough. We need more information from this 4-hour time frame. So let's continue. And now looking here again, I've got a 4-hour liquidity sweep, 4-hour stop points. So all these informations are telling us that yes, dollar is going to drop. The dollar index is going to drop. And if dollar index is dropping, definitely Euro USD should be buying. Euro USD should be buying, right? Now we have this SMT here. We have this SMT, we have this liquidity sweep, and that's another SMT for us. That's another SMT. So looking closely, I have an internal range liquidity here. Where is my internal range liquidity? I have this 4-hour gap. I have this 4-hour gap here. So I'm expecting price to play this 4-hour gap and start to drop before coming for this daily draw on liquidity, this DOL here. Before coming for this daily DOL. So hopefully today or maybe tomorrow we might see something like this for the drop. So let's go down to the 1-hour time frame. Okay, making use of our PD array. Making use of our PD array, let's leave this. Let's keep this way. So let's use our PD array to see if this. Okay, but before that, we have a 1-hour gap here. We have this 1 hour gap here. So let's use the PDRA to know if this gap is in our premium zone. Yes, it is. It's in our premium zone. And let's check if it aligns with our optimal trade entry, our OTE. Okay, we have our OTE here. So what am I going to do? I'll just have to wait patiently for price to trade into this 1 hour gap, go down to a lower time frame, get a confirmation for the sales. So this is what I'm expecting on the dollar index. This is what I'm expecting on the dollar index. Might play out today, might play out tomorrow. I don't know, but I will keep an eye on dollar index to see if price trades into this gap. And when price trades into this gap, I'll go down to 5 minutes and look for something like this, for price to give me something like this on the 5 minutes. So I have a lower time frame liquidity grab, a structure shift. This is my best entry model. This is my best entry model. Lower time frame liquidity sweep, market structure shift, and price playing the fair value gap, the 5 minutes fair value gap. So I'll have my stop loss just above here. I have my stop loss just above here. In that way, it will help me with a good risk to reward ratio. I normally go for 1:2 or 1:3. So this is what I'm expecting to see price give me on a 5 minute time frame. So let's quickly take a look at Euro USD and see what we're going to get from Euro USD. I have to remove all the join. So looking at Euro USD, this monthly time frame on Euro USD, all the candles here represent what happened in the last 1 month. So I have this internal range liquidity here. I have this internal range liquidity, which is our monthly fair value gap. And the month of February actually closed perfectly well above our monthly fair value gap. So what is this thing telling us? That's our number one sign that I'm expecting a bullish Euro USD from what I'm seeing on the monthly time frame. We have this buy stop liquidity resting above here. And we have this buy stop liquidity resting above here too. Right? We have this buy stop, we have this buy stop. So from what we are seeing, in Forex, we don't trade what we think, we trade what we see. We trade what we see and not what we think. So from what we are seeing on the monthly time frame, we are seeing a bullish Euro USD on the monthly time frame, and we also saw a bearish dollar index on the monthly time frame, right? So we have this monthly fair value gap here that price already played. The month of February already played and closed above. Then this is the month of March, given that bullish signs. So let's quickly go down to the weekly time frame and see what we're going to get from the weekly time frame. So here, weekly time frame is kind of giving me some nice vibes, right? We have the first one, we have this liquidity sweep here. We have this liquidity sweep here. gotten an up close candle. And another one, I have price closing above this other block. I have price closing above this other block. So for 4 weeks now, price have been, or for 3 weeks now, price have been, yeah, 4 weeks. 1, 2, 3, 4. This is this week. So price have been respecting this other block. Price have been respecting this other block, right? So zooming closely again, I'm seeing something like a failed CB. I have a failed CB here, giving us an inversion. Giving us an inversion. So we have inversion fair value gap. Why is it inversion fair value gap? So if you've been in our advanced class where we talk about fair value gaps, the types of fair value gaps we have CB, we have BC, we have volume imbalance, we have inverted fair value gap. So what we are getting here is an inverted fair value gap. Price is meant to respect this CB, fill up this CB, which is sell side imbalance and buy side inefficiency. Fill up this and start dropping, but instead this candle closed above. You can see that this bullish candle closed above this gap, giving us an inversion. So this inverted fair value gap now is serving as support to help push price up. It's serving as a support to help push price up because this candle alone closed above it. And last week, this candle retested. You can see the week, this candle retested that inversion. So we are expecting that this zone is going to help push price up from what we are seeing. From what we are seeing, right? So let's quickly go down to the daily and see what we're going to get from the daily. Okay, perfect. Daily explains it very, very well. We have our weekly inversion. You can see the retest on our weekly inversion. You can see the retest, these two candles. This one closed, this bullish candle, strong bullish candle closed above it, right? So I'm deleting this. I don't need them no more because I've already gotten enough information from them. So now we have this liquidity sweep here, right? That's another confirmation, and we have this turtle soup. We have this turtle soup. So looking closely again, I have this breaker. I have this breaker that price I've already tested, right? So this is another confirmation that price is going to go up. Euro USD is going to buy, at least to come take out this buy stop liquidity resting here. We have plenty of liquidities here that price needs to take out. So if we're able to get a confirmation on Euro USD, a buy confirmation on Euro USD, so our first target will be here, second target will be here, then our third target should be this relative equal highs here. Should be this relative equal highs. This relative equal highs, and finally for this overall high we have here. For this overall high we have here, but we don't know that yet until we check all the time frame and see that we are on the same page in all of them, right? See that we are on the same page in all of them. So zooming closely on Euro USD for our time frame, I've got an SMT here. Remember, we have an SMT on the dollar index, and now I have another SMT here. So zooming closely, I have this internal range liquidity. Okay, now I think I'll have to go back to dollar index so you guys will understand this. We have this SMT here on Euro USD. So let's quickly go back to dollar index. Dollar index, we have this. Dollar index, we have this SMT. Euro USD, we have this SMT. And looking closely again, I have this. This is another SMT. So going to dollar index, I have this. So this is helping to push price down. This is helping to push price up. But that is not enough. That is not enough. Now I have this 4-hour internal range liquidity. I have this 4-hour gap here. I have this 4-hour gap, right? So from what we are seeing on Euro USD, we're expecting price to drop into this 4-hour gap to continue the up movement, right? So let's check let's use PDRA to confirm. Okay, we have this the 50%. These are our discount level and these are our premium level. So, but I won't really go for this 4-hour gap. Reason I need something that is deep in the discount level. This will make me go down to the 1-hour time frame and see if there is any information from the 1-hour time frame. Now, this is my 4-hour gap. I have to label this 4-hour value gap. For our fair value gap. Now I have this tiny 1-hour gap here. I have this tiny 1-hour gap. And this should be okay. So this 1-hour gap is right in our discount level. This 1-hour gap is right in our discount level, right? So these two, whenever price drops down to these two, I'm going down to 5 minutes time frame to look for a confirmation. I'm going down to 5 minutes time frame to look for a confirmation, something like this. This is my best entry model. Lower time frame liquidity grab. Lower time frame liquidity grab, structure shift, and the 5 minutes gap. My stop loss will be below here. So this way it will help me with a good risk to reward ratio, which I normally go for 1:2 or 1:3. So this simply means I'm risking 1% of my account to target 2% of my account. That is if I'm going for 1:2. And if I'm going for 1:3, I'm risking 1% of my account and targeting 2% of my account. I'm targeting 2% of my account. So this is what I have for the dollar index and Euro USD. This is what I have for dollar index and Euro USD. So let's quickly take a look at NASDAQ. Let's quickly take a look at NASDAQ, S&P 500. I think I have to start from the weekly. So NASDAQ gave us an all-time high. This is the weekly time frame. NASDAQ gave us an all-time high. Previously, NASDAQ reacted to this block. NASDAQ reacted to this block for this impulsive movement, right? And another one, we have this internal range liquidity here. We have this internal range liquidity, reach price, but we actually missed this move because I was expecting price to drop down to 4-hour gap, but that didn't happen. So price just played this daily gap. Price just played this daily gap. So currently, from where price is now, we have this buy stop liquidity here taking out. We have this buy stop liquidity here taking out, and looking closely again, looking closely, I have this block, I have this other block, and price is currently trading inside this gap. So price is currently trading inside this gap. Let's see for us. Okay, so this is not my kind of trade because as it is now, price might give us an inversion from this 4-hour gap. So I just have to, stay out of NASDAQ because this is not my kind of trade. But nevertheless, let's go down to 5 minutes straight up. Okay, so 5 minutes might wanna come and sweep this Friday low because this is a fresh low. Price might want to come sweep this Friday low, or since price is trading inside our daily gap, we now have this. We have a sweep here. We have a sweep here. So let's see if price will come and close above this high. Price closing above this high will be very, very nice movement for us. So if we're able to get something like this, if we're able to get something like this, that will be a very wonderful sign for us on NASDAQ, right? Since we've seen a stop hunt, and this is a label this SH. Bring this here to the bottom. So since we've seen an SH here, so let's wait and see if price is going to sweep this high, break this structure to the upside, giving us a wonderful confirmation that yes, price, that the daily gap is holding price. At the daily gap is holding price. You just have to sit tight. You know, in forex is 99%. Okay, let me put it this way. Forex is 90% waiting. Forex is 90% waiting and 10% execution. So Forex teaches us how to be patient in life. If you really want to get something, you need to be patient and wait for it to play out. Don't chase price always. Don't chase price. Always wait for price to give you a footprint, then you follow. So let's look at S&P 500 for drawing. Let's go down to the daily time frame. Okay, just like what we saw on NASDAQ. Just like what we saw on NASDAQ. We have this buy stop liquidity here taken out, right? We have this buy stop liquidity taken out. Previously, price played this daily gap. The same thing that happened to me on NASDAQ happened to me here. I was waiting for price to come down to the 4 hour. Let me show you guys. I was waiting for price to play this 4 hour gap here. I was waiting for price to come down to this 4 hour gap. Reason being that I have this LQ sweep here and this structure shift here. And this structure shift. So I was waiting for price to come play this, but that didn't happen. Instead, price played the daily 50%, the daily consequence encroachment. Price played the daily consequence encroachment to give us this up movement, right? So today we have this gap. We have this, which price is currently trading into, and let's take a measurement of this gap. So we have our 50%, this line. I have to level it CE. As is consequent encroachment. I have to level it CE. Consequent encroachment. So let's check for us. Our price currently trading within our consequent encroachment. So what will happen here on the 5 minutes? Okay, now that's a nice confirmation we have. Price closing above the consequent encroachment after giving us a liquidity sweep, lower time frame liquidity sweep. So what I'm expecting next is for price to give me a structure shift. Price to give me a structure shift. Let's continue the up movement. We have a close above the consequent encroachment. So that is our number one confirmation, price close above the consequent encroachment. So let's see if we're able to get a structure shift here. Let's see if we're able to get a structure shift, then we know that yes, we have a confirmation to trade either NASDAQ 100 or S&P 500, right? So like I said earlier before the start of the call, we have a news coming up today around 4 p.m., which is ISM PMI service. Let's see. Measure level of diffusion index based on surveyed purchasing managers, excluding the manufacturing industry. So usual effect, actual greater than forecast is good for currency. So what does it simply mean? If by the release of this news, If the actual is positive, that means Euro US is going to be strong. If actual is greater than forecast, let's say we have 54.0, that's a positive news. It simply means that dollar is going to be strong. So you have to watch out for this news. We've done our technical analysis. Now, fundamental analysis plays an important role in forex trading. Fundamental analysis plays a very, very important role in forex trading. But fundamental and technical, they both work hand in hand. So if you're well grounded in technical, please do yourself a favor to be well grounded in fundamental as well. So if the actual is greater than forecast, that means that's a positive news for the dollar, but I'm expecting forecast to be greater than actual to give us a negative news, right? So guys, if you've got any question, always feel free to reach out to me on WhatsApp, and I'll be glad to attend to all your questions. I'll be very, very glad to attend to all your questions. And we have an event coming up. We have an event coming up on Friday, the Forest Alchemy, the flyers and yeah, the flyers and the videos will be ready by the end of today. So if you are in Abuja, and after the event, we will continue our 1 month free beginners classes. So if you know anyone who wants to, to be part of this wonderful experience, feel free, invite them. Our offices are, we have our office in Allen Avenue, 54 Allen Avenue, Ikeja in Lagos. And we have our office again. If you are in Abuja, you might want to come to our office, Central Area, Abia House, Basement 1. So guys, always feel free to reach out to me if you have any problem related to Forex or concerning our broker. I'm always here to help you guys 24/7. Okay, so thank you for being on this call, because I know that we all gain value. Please if you know you gain value from this London session analysis, please kindly put a 111 on the chat box, please. So I know that we all gain value from this. All right. Thank you very much, Kingsley. Thank you very much, guys. So see you guys tomorrow, same time, 8 a.m. for the London session analysis. And once I get a confirmation, I'll be dropping the signal on the general community. I'll be dropping the signal on the general community. This is the start of the week. So we all need to make money for the start of the week. All right. So guys, I wish you all well today and do have a lovely day. Bye. You're welcome, Mr. Ali.